It's storm season. Let's talk about it on Today in Mortgages. Hey, what's going on, Dreammakers? Welcome back to the show. We're talking about what's real, what's hype, and what you should actually be paying attention to out there in the world of mortgage and real estate news. Today in Mortgage, Rich back with me again. Rich, how you doing?
I'm doing great, Michael.
All right, Rich, you and I have been talking a lot about housing and economic storms, but one of the things that you don't have to worry about up there is hurricanes. Am I right?
Yeah, fortunately.
Not a lot of hurricanes up in Arizona, but it's a fact of life here in Houston. You sent me an article today. It says hurricane season arrives amid homeowners insurance hikes. This is from Housing Wire. Rich, what stood out to you? Why did you send this article to me? What are we talking about today?
Well, we're always talking about interest rates and how it's making homes more or less affordable today. And this is, of course, that is a piece, but it's everything. We're looking at right now going into hurricane season, and many people especially on the East Coast and the South, along the Gulf, they've seen homeowners insurance increases up close to 50%. So that is a lot. So when you're looking at qualifying a borrower today, yeah, you're dealing with a higher interest rate, but you're also dealing with higher real estate taxes and much, much higher homeowners insurance premiums.
It's definitely true, Rich. Just personally, we escrow on our mortgage, and my monthly went up $450 this year. And so that has been a real fun thing to deal with. And I am getting off easy compared to a lot of the stories that we're hearing out there, especially on coastal areas, Florida, et cetera. So as we have Hurricane Aaron forming in the Atlantic, this is kind of becoming more and more top of mind. So, Rich, what do we do about this? Are there solutions? What can be done? What does the outlook look like for the future?
What you need to do is shop around. Like, as a mortgage advisor for 30 years, I've always had trusted partners, right? That I refer my potential buyers to get quotes. This time today is you really need to check around and check your own partners and if you live in the community that you're lending in, you need to get quotes from multiple places, multiple sources for your own home, so that when you share with a client, you're saying, hey, I just did this for myself. I recommend you look at this person because it may free up $50 a month. That may be the difference in qualifying and not qualifying for that home you want to purchase. So you just need to look, because while the coastal areas, the hurricane states and the fire states drive premiums up for those particular states, there's only so much premium they can drive up in that state. So the rest of the states share in that. Like a State Farm or a Farmers, they're not just hitting the people there. They're hitting everybody. Maybe not as steep as it is on the West Coast or the East Coast or down in the Gulf, but everybody else gets a little piece of that premium, that rise in premium. So just be a pro for your potential buyers and make sure that you're referring them to very, very competitive homeowners insurance companies.
How much of the rise nationwide in cost do you think is due to maybe rebuilding regulations? Like, it's so hard, the cost to rebuild after these disasters is so high because of red tape and regulations and inspections that people have to go through. If some of that could be relieved, do you think there's potential to lower insurance costs overall?
Maybe, I don't know. But you look at these, big events. It's one thing to have a house fire, right, in your neighborhood. Okay, well, nobody else's house is burning down. When you have a flood or you have a major disaster, fire disaster, many homes, like look at the West Coast, you've got entire swaths, neighborhoods, cities done. So when everybody needs to rebuild at one time, it's just a tragic event and something that happens. It just seems like we're seeing them more and more often, at least in the last 20 years. They're bigger and they're more often, and it's really creating a lot of damage.
Rich, anything else in this article that stood out to you that we want to look at today when it comes to insurance or just kind of the cost that we're seeing there?
Well, the loss ratios is what they're really referring to. Oftentimes when you and I, the average homeowner, has to use insurance for something, it's not for total rebuild, reconstruction. It's this happened, that happened, little things. And that's what insurance is made for. Of course, your homeowner's insurance is there to cover in a major disaster. It's just that the loss ratios are so high, meaning it's a total scrap down to the foundation and rebuild. That's where it gets very costly for insurance companies. And I'm no fan of insurance companies, but it is brutal on a single company or multiple companies in a certain area to have to rebuild everybody's homes. And that's just why premiums are rising so rapidly. And we do have some inflationary stuff that is affecting some of the premiums, but it's mostly that loss ratio on these major events.
Yeah, and when it does cost so much to rebuild right now, you can't expect those premiums to go down anytime soon. Rich, that's talking about storms, actual physical storms. Obviously, we have financial storms going on as well. We continue to have some sort of interest rate and housing crisis. There is a meeting going on in Jackson Hole right now. Anything coming out of that so far that we should be paying attention to from the Fed?
Boy, there's just so much weight on what the Fed says today, and I think back to last September when they cut 50 basis points, kind of unexpectedly, and then cut another 25 and another 25, so 100 full basis points by the end of the year. What happened to interest rates, Michael?
Didn't go anywhere.
No, they actually
They
went
went
up.
up.
Yeah, they went from like mid to low sixes to all the way to 7%. So the expectation is that the Fed is going to come off the Fed fund rate. That doesn't mean it's going to directly affect interest rates. So we need to be very, very careful on that. And after experiencing what we experienced last year, we can only expect something similar to happen this year if that were to happen. So because the economic issues are not just around the Fed funds rate. I mean, we've got unemployment kind of worsening a little bit. We got jobless claims come in higher than expected just this morning. You got the revision that happened, earlier this month. So we didn't gain as many jobs as we had hoped. So right now, the Fed Chair Powell is going to address, I think it's tomorrow morning at 10 a.m. Today's Thursday as we record this. So tomorrow morning, 10 a.m. Eastern, he's going to be addressing this stuff. And he will have, apparently, all the data from the revisions that should impact not his decision, but the board's decision to lower interest rates. I don't know what to expect. I don't know what the outcome's going to be in terms of what the interest rate, mortgage rates will look like in the street, just because we experienced something that went the completely different opposite direction that we expected last September through December.
Yeah, and I know rates have been pushed down a little bit in the past couple of weeks, kind of maybe in anticipation of that. So maybe it's baked in. We'll see.
Oh, yeah.
There's certainly a lot of indicators that are being juggled to make these decisions right now, and it's hard to tell which ones are going to push and pull in the direction that we might want to see them go.
Yeah, for sure. So what I would encourage everybody, if you're a mortgage pro and you're watching this, qualify your borrower. Qualify your borrower on today's rates. If they qualify, encourage them to get out and get after it and get under contract. Like we've been saying this for a while, and it's true. Rates are going to come down over time. They are going to refinance. Qualify them on the rate today where they're in a good position to negotiate with a seller. Sellers are putting lots of seller concessions out there. Use those funds to buy down interest rates to get your payment down. Don't discount the home. Use it. Use those concessions to buy your interest rate down. There's way more options when you got those concessions to work with.
That's a good word, Rich. You're always helping us get some perspective here, and you're always helping our loan officers grow and develop their skill sets to make sure that they're able to get out and communicate these things to their borrowers and buyers. And so if you guys are out there looking for a place that's going to help you grow, develop, and win in this economy, network funding might be a good home for you. If you're interested in learning more about the best network in mortgages, click that grow link below. Rich will get in touch with you, and you can go to u.nflp.com to learn more. Rich, any final words before we sign off today?
That's it. Reach out to us if you want a place where you're going to be heard, where we recognize your entrepreneurial spirit, and we encourage it and give you all the tools to move forward.
Well, thanks, Rich, for making us smart on this. Hopefully the heat storm out there is not so bad, Rich. We'll see what happens in Jackson Hole. I'm sure we'll be talking about it next week. Until then, thanks so much. We'll see you guys next time on Today in Mortgages. Today in Mortgages is produced by Network Funding LP, which is an equal housing lender, NMLS 2297. The content of this program is meant to be a commentary on mortgage and real estate news, and any discussion of rates and or products should not be taken as an individual mortgage or home buying advice or pricing estimates. And any commentary on this show should not be considered a promise to make a loan. All applicants for a loan must qualify, and you should consult a professional regarding your individual loan scenarios for your financial situation. Visit our website at nflp.com/licenses for all state licensing and other legal information.